Hello everyone. I hope Michael joins me back. Okay, I see him. So today we are discussing the U.S. non-farm employment change and unemployment rate, which will be out in about 10 minutes from now. And as you can see here, me and my colleague Michael are here to cover this data for you. So as you can see on my screen, at the current moment the forecast stands at 185K, while the prior figure stood at 142K. Talking a little bit more about the projections and the historical movements of the indicator, I will remind you that the U.S. economy created 142,000 jobs in September, missed forecast for a 201,000 jobs gain, and schooling expectations for a nearby rate hike. The unemployment rate remained at 5.1%. The Fed officials have been keeping close eye on the jobs report to back up a rate hike decision for the first time in more than 9 years. The participation rate plunged to 62.4% in September, the lowest since October 1977 actually. That's quite significant. And also the total labor force fell to a 2015 low, losing another 350,000 people. U.S. jobs addition in October is forecasted to be 185,000, while the unemployment rate is expected to remain 5.1%. And here I also wanted to mention Louis Alexander from Nomura Bank, who forecasts the non-farm payroll gains to be at 155,000 only, while the employment rate he expects to be at 5.0%. And the comment goes as follows. In October, incoming data on labor markets have been mixed. Again, are not suggestive of a rebound to an above 200K gain in payrolls. Although initial and continuing jobless claims data are at low levels, survey data have been negative, and economic momentum so far in October seems broadly unchanged from September. And as always, we have our experts' estimates on the matter. And according to their views, we have the Bloomberg survey summary, where the median estimate stands at 185K, average estimate stands at 183.46K, high estimate is 250K, while the low estimate is 75,000, and the total number of estimates has reached 93 this time. And again, I have one more quote. Yes, it's from Credit Suisse. They expect non-farm payrolls to come out at 170,000, while the employment rate at 5%. And the comment goes as follows. There also are good reasons to expect upward revision for the sour August and September jobs points. The history over the past 6 years has shown a strong tendency for payrolls to be revised up in October jobs report. Since 2009, net cumulative revisions to August and September jobs have averaged plus 80,000 per year. And of course, last but not least, our Dukascopy community member sentiment on USD Japanese yen currency pair. We can see that the traders are rather bullish on the matter at 61.17% versus the 38.83% bearish vote. And of course, as always, you can see a couple of comments here on my screen. But since I don't have any time left, I would like to pass the floor to Michael, who will cover the technicals and also the initial reaction of the market. So please, Michael, the floor is yours.
Hello everybody. So for today's non-farm payrolls release, we have the euro-dollar currency pair, the positive surprise trading strategy, and the sell market, meaning that we expect the data to be better than in the previous month or the forecast. thus seeing the euro-dollar fall. So the sentiment for the given pair is close to neutral one, with bulls slightly outnumbering the bears and taking up 51.59% of the market. The US dollar is being bought in 55.10% of all cases, while the euro being sold close to the equilibrium at 50.20% of all cases. Concerning the pending orders, both in the 50 and 100 pip range, they are to sell the euro. In the 50 pip range it's 60.15%, and in the 100 pip range it's 57.5%. So other market participants are nonetheless bullish on the euro dollar, with Oranda at 53.79% of traders holding long positions, and daily FX has 58% of traders being long the euro. However, the Saxo group has nearly 57% of bearish traders. So, concerning the market reaction table, we can see that the largest reaction was 5 months ago, 159 pips, and the smallest one was only 60 pips 4 months ago, and the approximate average reaction we could expect today is 93 pips. And because it's so large, I couldn't fit the take profit and stop loss levels on the graph, unfortunately. This is the one thing I hate about the non-farm payrolls and the euro dollar specifically. So I'm just gonna graph. The stop loss level is located all the way up here, so somewhat close to the daily R3. And we also have a resistance trend line over here, which has prevented the pair from edging higher since the beginning of November. So it is bolstering the stop loss level in case we see worse than anticipated data. We should not see a rise of the euro dollar beyond this point. At the same time, the take profit level is located all the way at 1.077 78, sorry, and it is also bolstered by the daily R3. And on the way closer to the spot price, we have the resistance trend line, the support trend line, which has been there for approximately 2 days, but this support is not as strong, as the pair has made a solid attempt to break through the given line. I think it was yesterday, so it's somewhat weakened, and it's actually making attempts to break through it right now as well. But nonetheless, we'll see once the data is published, and we'll see where the pair will go. So the technical indicators are giving us bearish signals from the 30-minute to the daily time frames, with of course the most important one being, as usual, the 30-minute time frame indicator, since it was updated specifically for the given data release, and it is giving us bearish signals, so suggesting the pair will go down, and according to the forecast. But nonetheless, the ADP data showed us on the Wednesday's release that there's going to be a 190,000 jobs number created this month, but I wouldn't really trust the ADP release, especially after the last one, when it significantly missed the actual number. So we might actually see a weaker number today, because Morgan Stanley forecast a 165,000 number of jobs being created last month. And it was the top forecaster of the non-farm payrolls, according to the Bloomberg survey. And the CTG Capital Incorporated also expects a 175,000 figure. So both of those are less than the forecast, but nonetheless we see the euro dollar go down. So I'm guessing the data is better than anticipated. Let's just wait until it appears in the chat. And yes, we actually have a lot higher number, like 271,000. That is a huge difference, and we actually see the take profit level take profit level crossed, so really huge reactions, since the data is a lot better than expected. Currently 125 pips to the pair going to the downside. So that is quite a good sign for the US economy. So it will probably increase the chances, forecast the probability of the Fed raising interest rates on the December meeting, because Janet Yellen said on her testimony on Wednesday that they will be paying close attention to any data that is going to be released between now and the meeting minutes in December. So this is definitely going to add to the cup of raising rates. So I believe that is all from my side, and just back to you, Kate, if you want to add something.
Of course I want. I like to speak. Don't you know that? Okay, once again, the USA change in non-farm payrolls came out. Thank you, girls. At 271,000 this month. Beating the expectations of 185,000 of the experts. So let's see what is going to be on the December meeting of the Fed. And meanwhile, let's give the floor back to Hamad, who will give us the analysis on the New Zealand dollar CAD and USD CAD support and resistance. So see you next time, and thank you for now. Bye.